Hey, Johnnie Roberts, have you been out in your yard doing some yard work, man?
I have. It's been fun.
That's good.
The riding lawnmower still works.
That's a good thing.
Um, the our regular lawnmower that you push, that you use for like trim and all that kind of stuff still works. That's an amazing lawnmower, by the way. My brother gave it to me when I moved here 14 years ago. That thing, you put gas in it, do a little oil
Yeah,
change. That thing starts up every year with like three pulls.
it's
Unbelievable.
amazing, isn't it? Yeah. It's
Man,
it's funny. We moved into a new house last year, and my yard's a little bit bigger, and it's got a little hill on it. And so I had a 30-inch push mower, self-propelled. It was great, but it was kind of old. And I talked myself into getting a riding lawnmower in order to teach my daughters how to drive. And I fell in love with that riding lawnmower, man. It's a John Deere, and it's so much fun. It takes me a whopping 15 minutes to mow my yard now, so I love it.
it is. It's cool. We got ours actually. My wife found it at a garage sale about 12, 13 years ago.
Yeah,
700 bucks a John Deere lawnmower. Had to get new batteries and change the oil and put new blades on it, man, every little so often
yeah.
and awesome. So yes.
I love him. I love him. Well, okay, we're not here talking about really cool machines. That'd be our RCMs, but we're talking about RMDs, which are
Mm.
required minimum distributions or something like that. So I hear that term a lot, Johnny. RMDs, and you have to be, this and that and the other. And I'm like, what is an RMD and how can you use it? So can you kind of explain that to me? What?
RMDs, so stands for required minimum distribution, right? So that is from tax deferred account. So to simplify it for things, it's traditional IRAs, things like 401ks, right?
Okay.
403Bs. You didn't pay taxes. You got that little tax break when you put it into that account
Yeah.
years ago when you did it, but now you're retired. All the money you put into it, plus all the interest and all that kind of stuff, is now taxable.
Hmm.
So eventually, the government makes you start taking it out of there, right? Because they're like, we are
Right.
getting taxes on this money. And so, as of right now, current law at 73 years old is when you have to start doing RMDs. So required minimum distributions are based on a percentage formula of your total IRA money. Now, you can have your
Okay.
IRA money in maybe an annuity and a brokerage account. You can have two or three different IRAs, but it's a total of all of them is where the
Okay.
formula gets. So if you're like, this company sent me a letter saying I just have to take it out of this much out of over here. Be aware that might just be for that amount in that particular IRA. It's overall all your IRAs together, and they
Okay.
should let you know how much you have to take out. Each company will send you that information, but you just got
Okay.
to be aware of it, or there's the penalties and that kind of thing you got to pay. But it's
Uh,
taxable, just like a job. It's taxable income. So if you make $40,000 a year at 72 and you have to take out $10,000 for RMDs, 73, what did I say, 40,000? If you made 40, you have to take out 10,000. Now your income is 50,000 for that year.
yeah.
When you do your taxes, that's what it's based on.
Oh,
50,000.
interesting. So it could affect your tax rate, and these are required by the government at certain ages, um, because yeah, in essence, they're
73,
wanting
yeah.
they're wanting their money, right? Because they've given your money tax deferred. Now it's time to pay the piper in a sense. So they're
Right.
required at a certain point in time, and you said I think now it's 73 or so. So you have to take out a certain percentage. Is it every year?
Every year you have to, within that time period and calendar year, and the percentage, just easy numbers. It starts, we'll just use number 4%. So it starts kind of just under that, but there's a formula that's used. But in your head, just imagine 4% kind of is a way to think about it. So if it's $100,000, your RMD is probably going to be 3,900 or somewhere, somewhere around there,
Okay. Okay.
generally for that. Um, but yeah, then that percentage increases every year. So it goes up and up and
That's
up, you
nice.
know. So if you were thinking in your head, well, I don't need to use this money. I want to make sure I have it for uh, long-term care or leaving the beneficiaries or whatever it may be, you're going to have to start taking it out at 73 years old
Okay.
if you have tax deferred IRA, traditional IRA money. Okay.
Okay.
So that's one thing, and it's taxed just like income. So it can make it so you have to go up in another tax bracket
I
for those
wondering.
particular funds, you know. So if you're right on the border and the $10,000 is taken out, well, that $10,000 could be taxed at a higher bracket, right? Because everything's marginal. So your first certain amount of money is taxed at this bracket, and then the next amount of money from that bracket is taxed at that higher tax
Right.
bracket. So you can see that affecting your taxes. So overall, your marginal tax rate goes up. So the amount of taxes, bottom line, you're paying will increase because your marginal rate averaged out will be a little
Right.
higher. So
Okay.
it can kind of
And
sting if you're not preparing for it,
well,
you're not thinking about it, and you're just like ho humming along the way with all this money in an IRA. Yeah, it's good to have the money and yeah, get some extra money, but once again, tax planning, what was that money's purpose for?
right. Right.
Because
Well,
part of the purpose is going to be forced to put it in your hands now. So, and for Uncle Sam, your business partner, to get some money. So,
right.
IRA money, if you don't think about it, remember one purpose of it is for Uncle Sam, he has ownership of it, to get some of his money and to make you take some money out.
Hmm. That's interesting. So yeah, and it comes back to planning. I know we're not talking about gardening, but if you said your wife does the flower beds and things, she probably plans a little bit of what she wants, which flowers, where they're going to be, and it's going to look beautiful. And in retirement, you need to do some planning because I could see this sneaking up on somebody, and them saying, what do you mean I have to take money out? And then it in fact impacts their income and impacts their
Absolutely.
taxes, and it could become really bad. Now, if you take that money out, you pay the taxes on it, then the rest of that money is yours to do with what you want, right?
Yeah, you can do whatever you want with
Okay.
it. There's some things to help you out with the taxable status of it. You can do some charitable donations up to a certain percentage and different things like that that can kind of help offset some of that. You could reinvest it, right? Put it into an account or whatever you want to do with it. If you're still working and getting earned income, you can actually put the money into a Roth and
Oh,
begin
there
to
you
build
go.
up a Roth IRA to make it tax free on the growth. Because remember, if you get $10,000 and you throw it in a brokerage account and it makes $1,000 in the next 12 months, well, that $1,000 is now taxable, you know?
Right,
So
exactly.
if you're still working, have earned income, you can actually put it into a Roth up to a certain limit. And then that interest you make and all that's tax free. So there's different things you can do with it. Once again, it comes down to, you know, what kind of flowers do you want? Where do you want them? How
Right.
you want them to look, you know, and planning it out.
Well, yeah, and planning it out is really cool because I know you talk a lot about legacy and things. So somebody at 73, they could take their RMDs, pay the taxes, and invest that in a Roth for their grandchildren, maybe, or a college fund, or I mean, there's so many things you can do with it that I
Pay a
think
life insurance premium, you know, if you want to,
absolutely,
you know, so if you can qualify for something like that. So
yeah.
for
Um,
sure.
there's lots of opportunities and things, and I think that's one thing I love about the way you approach working with clients and things is it's you're not there to sell them a product or so. It's like, what are we doing? What's your purpose in retirement? What's your family situation? What do you want to do? How do we help you get there and live that purpose driven life in retirement because you've done some thinking, you've done some planning, and these RMDs are not going to catch you off guard, right?
Yeah, and it's like once again, what is the purpose of this money? So I have to get $10,000 out from an RMD. I didn't really need the money. Um,
Hmm.
so what can I do with it? Well, I was planning on using that in case I have to go and get some health services at home or something like that. So what can I do? Well, you can take that $10,000, like I said, and maybe put it into a life insurance policy if you qualify. We talked about this in the past. Those life insurance policies that have those accelerated benefit riders. So
Yep.
you're taking your RMD that you get, and the first thing you're doing is you're increasing what it's worth right away if you were to get some kind of illness like that or if you
Right.
die. Second thing is you're making it tax free.
Yeah.
So the $10,000 might become $60,000 in the event of those situations, you know,
Right.
but it's also tax free now. So you're making it more valuable than what it is by using it properly if it's a goal or need that you need to fulfill, you know. So all that can come into play going forward. And if you're not there yet, you're like 10 years from your RMDs or 12 years or whatever, you can plan ahead of time. And how do I get it? Like we've talked about Roth conversions and things like that. So they're coming for everybody. It doesn't matter if you're 60 or 73 or you're already taking them or whatever. Um, if you're ahead of time, there are things you can do to put yourself in a better situation than
Mm-hmm.
regular RMDs. If you're already getting your RMDs, what can I do with this money to make it more valuable and more purposeful for me?
Right.
So
Yeah.
everybody can have planning along those lines and kind of figure out what they want to do.
Yeah, and the thing I love, Johnny, is when people come into your office and sit down, it's not like they have to come up with all these ideas. All they have to do is have a conversation, and you've done this for so long for so many people. You could just start pounding out questions and go, well, what about this? And how about that? And let me navigate this, and here's the answer to that. And it makes it a lot easier for
Hmm.
somebody like me to sit down and go, oh, I hadn't thought about that. Oh, you could do that? Oh, and I think that's the value of sitting down with you and just talking, having that first conversation of, here's what we're thinking, or here's what we're doing, or wow, I'm going to turn 73 next year. What's this RMD thing? How do we deal with this and have a conversation, because that's where everything starts.
Absolutely. And remember that bucket of money that's the traditional IRA where the RMD money's coming from. You're married, that's always taxable. So I die, my $500,000 IRA is now going to my wife. She automatically gives to her. Now, what does that mean for her? Well, we're married right now. So our tax bracket is married filing jointly. When I'm gone, the year after I'm gone, guess what? She's filing single. Now we know that single taxpayers have to pay the brackets are smaller, right? If you're married filing jointly, up to we'll say I'm just using an example, $50,000 is 10% taxes. For
Right.
single, it may be 25,000. So that
Okay.
$500,000, she actually has less value in it now because their
Right.
tax brackets are going to be way higher because she's filing single. So planning all that out with these RMDs and like figuring out what can I do with these RMDs. Once again, what if you bought a life insurance policy on yourself for the purpose of protecting your spouse from those taxes? So
Yeah.
a life insurance policy. So when I die, she gets this and she has to start taking out these RMDs, which she's going to be taxed at higher. Now she has a tax-free life insurance policy that's going to
Right.
cover those taxes,
That's awesome.
right?
That's so
So
cool.
there's a lot of things you can do if you just put your head to it and kind of plan. And we try to help, throw some seeds out there.
Yeah.
You
Well,
can,
it's things like that, Johnny, that people don't even think about. Who
right.
would think, if you're not in the insurance finance world, why would I ever think about my wife being having to file single and the tax bracket of that? And that's why it's so important for people to sit down with you. It's because you've done this a couple of times. You've been around the block a few times, as they would
They
say.
still have to take their RMDs. So don't
Right.
don't forget that. So your spouse is taking the RMDs, the same amount you were getting, but now the taxes are going to be more naturally because she's filing single.
Yeah.
So once again, when you're married, it depends on everyone's individual situation. So you just want to sit down and be like, hey, give me some ideas of what
Yeah.
all this means and lay it out in front of me so you know all your options. You
That's
may need your RMDs to buy bread and milk,
that's right.
which that's what you do with it. But there are other people have different scenarios and different things that they want to accomplish. So it's
That's
good to
very
know all those options.
well. It is, and those options come as you have a conversation with Johnny. Retire at New Heights is his book. That's you can go to retireatnewheights.com to get a copy of that. Reach out and just have a conversation. I mean, good golly, you can just tell from this conversation he's done this so many times. He just knows things that I would never have thought of, which is cool. That's why you want to work with an expert like Johnny. So go to his website and get a free copy of his Amazon best-selling book, Retire at New Heights, and then schedule a conversation with him so that he can help you retire at New Heights.
Awesome.
Johnny,
Thanks,
great
Mike.
episode.
You too, buddy.
Bye bye.
Bye.